Hello and welcome to the Money Charts channel, and today's date is the 12th day of June 2018. My name is Derek and this is the crypto day morning. Okay, 7:35 a.m. Eastern time, and price actions just really doing a lot of the same. We've had a lot of these lower highs and what is now a third test within the $6,000 area. After the big red down day on Sunday, price action really didn't do too much yesterday, and so far today, less doing stuff. Halfway through the day, barely even can see today's candle. The high for the day is in at 68.80, and the low is, well, 6,800. Differential, a little over $80. That would be about 1.2%. That's barely anything at all. On the single 1 hour time frame, we are looking at, since the last leg lower, that price has been going sideways. You can call it a bear flag, with support originally established between the 66.50-ish level and resistance at about 68 and a quarter, 68, that area there. It had a small breakout above, not much higher, but a little bit, but it has been holding that level of resistance since that move. It's of course doing it within low volatility. Still a lot of this empty space up here if it is going to have any rallies, and because we've been in a very sustained bear market recently, I'm going to be very cautious of rallies for quite some time before I can find some good indications long term that this is going to be ready for bull market territory. And of course, if this area does break down below these levels, I'm looking at the long-term time frame for this, and the situation that we have this area of support long-term. Way I look at it with Fibonacci retracement, you got a low to a high. So from 0% to 38.2% is bearish territory. So anything below $1,000 would make Bitcoin bearish on the long-term time frame. Between the 38 and the 61.8%, which is between 1 and 3,000, that would be neutrality. And then anything above 3,000 right now is bullish on the long-term time frame. So I see this, yes, it's been in a sustained downtrend all year, but it's pretty much in the middle-ish kind of area between where it needs to be bullish to its high. So therefore, it could very easily come down here and thus continue to remain its bullish trend. And I think that would just be a typical situation that I'm not going to say is good for the market, because there's going to be a lot of people that are going to get washed out if it does become that great bottom. But I would be hoping for myself, and the market's obviously going to do what it's going to do, that it comes down small pierce below 328 for me would be perfect. This ensures that every exchange I got a 3K buy order, it would hit. And then maybe stay down here for a day, because my plan as a trader is I want to get into altcoins in a situation like this. Why? Well, because I'm going to be expecting that a lot of the altcoins during this move are going to underperform Bitcoin, or their charts against the Bitcoin cross will go down. This will give me more Bitcoins to purchase with, because everything, of course, shorted in here, covered down here, will give me better than twice the amount of Bitcoins that I had before, with the prices of all the altcoins going cheaper. So if I had a day, that would give me a decent amount of time to buy. But I just got to be ready for the situation, for whatever that situation presents to myself at that time, and risk reward management for myself is always job number one. But to finish off what I'm saying from the 3,000, I wouldn't be surprised that if it were to go down there, that there's a decent chance that area is the low, and then it just has patterns of higher highs and higher lows that come after it. Maybe we could have a repeat of before. It's just going to be a long timing thing, and we might have a neutral range like this, and maybe it might take the rest of the year to do such. However long it's going to take, if it's going to do it, well, there's nothing else I can do, again, but just adjust to the message of the market. Let's move on to Ethereum Classic. And it's up today pretty nicely, about 20% against that of Bitcoin, as it has managed to come back to this line. And this is the Fibonacci level. What Fibonacci is it? It's the 38.2% from this low to this high. So therefore, this is the 76.4. I already stated before that everything above this line is bullish. Everything from this line to this line is neutral, and below such is bearish. So this would be a long-term bear market rally right now. It's, when you look at its progression, and above this first line would be super bullish, below the bottom line would be super bearish. But when you are going down below here, okay, you're still holding your bullish trend, and then you did not manage to find support at this point, putting it into bearish territory. But then it had some interesting rallies, November, the start of the year, even in February, getting up to the 61.8%, as it was moving from a bearish situation into a neutral situation. Of course, been downgraded to bearish again. Overall, it's just a very, very choppy market back and forth. You're going to have significant up and down moves along the way. And I prefer for markets when they go down low to be able to buy and sell on the way up. And I was very fortunate to see yesterday's rally at the right time. We take a look at this on a single hour time frame. It's when markets go, they just happen to go. I used to say this a lot more back in the day with these codes, because it seemed like this happened all the time, and expect that to happen again practically all the time, as that's what these cryptos do. When they have interesting up moves, they can go straight up. This is a situation where the price goes from the 187 handle to the 237 handle. So a gain of significant values. Take a look at this on the 15-minute time frame. I was able to get my sale in at 237. So I was getting this top in here, which was really, really nice. Even 238, I think I got. Let me just check. Actually, no, it was 234. 234, roughly around in here, at about 9:45 p.m. yesterday. And I haven't made a trade since, because it really hasn't done much. It's been going sideways. The one thing of note within markets, whenever you have a significant up move, it seems that what happens in here is both bullish and a bearish situation. For when I've looked at many of these markets that have big gains at the tops, notice how often you have a price correction of okay amount, and then it comes back and is close to the high, at the high, and in some cases even above it, at least not by too much. And then, of course, that's the last decent rally within this area it will have, and then roll over. But also notice with some of the moves that follow, how often did it go from a nice point A low to a point B high, have a nice correction, and then come back to the point B high and have another little bit of a correction, and then go after that. I don't know what the mathematical stats would be in a situation like this, but for myself, again, I'm going to sell at this 234. My last purchase was 188. Where was that taking place? It was taking place down in here. After all, this was a situation where the markets went down in here. It was a nice significant leg lower. And I'm just going to keep buying every time that situation comes into play. So then as far as my next trade is concerned, it's either going to be a buy as it fills some of this empty space, or it's going to break through this resistance, and I'm going to have to sell on that kind of measure. So I can take a look at this and state, well, if I'm going to buy, I'm probably looking around the 205 mark. I'll be looking to be placing a buy-in. And again, everything you do is within your own risk reward. Everything you see on here is how I look at the market. And in some cases, this being one of them, how I am playing a particular situation. I'm going to be looking to be selling probably up closer to okay, this is, yeah. First objective is a retest of this previous high. And for me, probably would be looking to sell next at about 250 something. And the overall situation as far as this daily chart is concerned, it's been very, very choppy. When you have a move like this, it's a statement. It's either going to start a significant move, and you would have to think it's not just going to be to this high. It would be at least, you'd even think a move up to, well, if you have a move that comes up to this 26, then that's creating a double bottom. And that's a bullish pattern. And a double bottom from that point on, you'd be looking at a move to the 394 handle as a key Fibonacci. But as it stands right now, and this will be the Steam chart to finish this video, markets are in a very bearish situation, as in they've been making lower lows. Steam, I had, well, based on my strategy, no choice but to be a buyer down at this lower level. So that means I'll either sell if it comes up here or buy if it comes back down there again. Thank you for tuning in, and have yourself a great day. Bye-bye.